What are your favorite picks?
We're looking more into so-called value stocks.
It is the time for the losers to be the new winners now.
I think that is a good conclusion.
We recently see a chorus of bubble warnings.
No, I don't share that concern.
On the scale of 0 to 100, how cautious are you now?
Probably on your scale at about 66%, sort of still a bit risk on.
Do you really get more and more reflation inquiries from your client recently?
I would say yes, we are.
Who will you bet, Elon Musk or Warren Buffett? 欢迎收看《顶级投资人》，本期嘉宾是瑞信首席投资官 Michael Strobaek 先生。瑞信是一家来自瑞士、历史超过160年，在全球50个国家和地区运营的全球性金融机构。截至目前，旗下管理的资产大概1.5万亿瑞士法郎，也就是1.63万亿美元。Michael Strobaek 先生是一位丹麦人，在行业内从业经验超过20年，目前就负责着1.63万亿美元的瑞信的投资。金融危机之后，在发达经济体，我们其实几乎见不到通胀的身影。但是最近伴随着美国10年期国债收益率的突然走高，在叠加拜登政府1.9万亿美元的刺激计划，市场突然开始担忧通胀这头沉睡了10余年的巨兽是不是会卷土重来。所以怎么样理解市场的这种焦虑，以及这样焦虑带来的市场的动荡，我们的采访马上开始。Thank you, Michael. Thank you very much for your time to join Top Investors Talk. First of all, where am I getting you today?
I'm here in headquarters at Credit Suisse in Zurich, Switzerland.
I read your memo, which was written at the beginning of this year, in which you said that the year 2021 will still be a year of decent gain on equity market. Now it's March. 2 very volatile months has passed. So do you have any change of that outlook?
Well, so far not, and our outlook is still playing out in its key messages as we thought. I mean, we have seen a good start to the year in financial markets. Of course, because of the additional debt burdens that we've gotten, monetary and fiscal in combination, it means as well that we need to have a very careful eye at inflation and what the central banks are doing. Recovery is going to be very strong, especially in the second half, and interest rates staying very low will mean that markets in general, but real assets especially, such as equities and commodities, will be well supported over what we call paper assets like bonds.
By region and by sectors. And what are your favorite picks?
Yes. So look, we're generally favorable at regions and sectors that will benefit from this reflationary, this recovery environment and the resulting sector rotation that we expect to see from the growth stock, or what we called the COVID winners, other growth areas that benefited directly from the pandemic. This trade, in our view, is coming to an end simply because we're going back out. And instead, we're looking more into so-called value stocks, stocks that look cheap on their PE, on their price to book, on their attractive on their dividend yield, etc. And those are really mostly in emerging markets and also in China. In developed markets, we have a very clear preference now for cyclical assets and markets. In terms of sectors, we like materials. Healthcare is something we like. And then lastly, financials for us could also become winners of this next phase of the markets. Financials have for years underperformed. Now we're seeing yield curves being very steep and potentially steepen even further. And that's good for financials in general, and they are quite attractively valued.
So it is exactly 1 year after the COVID crash. It is the time for the losers to be the new winners now.
I think that is a good conclusion. I generally think if you think about growth versus inflation, if the growth scenario right now is very crystal clear, but we're shifting more towards inflation, then that means we will see the sectoral rotation I talked about. More into value stocks, more into financial stocks, more into cyclical stocks.
The United States equity market reached a new high over and over. We recently see a chorus of bubble warnings. Do you have the same concern?
No, I don't share that concern. I don't believe that people anyway should be investing by looking at market levels. Markets always move up. Equity markets have moved up ever since they have existed, and if you were worried about the all-time highs, you could never invest into equity markets. But there are sectors, as I just said, technology and alternative assets, in some cases cryptocurrencies, that look as if valuation has just gone through the sky. And that has become, if you will, more difficult to justify and understand. In our view, there is not much exuberance broadly in markets, and let me just use a phrase from a very well-known investor, Sir John Templeton, who said very clearly and nicely that bull markets are born on pessimism, they grow on skepticism, they mature on optimism, and they die on euphoria. And I don't think, if we look today where we stand, that we've reached euphoria levels quite yet, or actually at all. I think the current market move is somewhere between skepticism and optimism. But as you also indicated in your questions, many people still doubt the sustainability of the recovery and markets, and that is normally a good sign.
On the scale of 0 to 100, as 0 is totally defensive and 100 is totally offensive, how cautious are you now?
Well, I mean, we have been in a risk-on mode for our, if you will, overall strategy. I was, with my team, one of the only ones, global CIOs, that decided to buy the lows actually in March of last year. We then took a pause in the summer months, took some profit. Well, I would say we entered the year at about 75 at the beginning of the year. We're probably on your scale at about 66%, sort of still a bit risk on.
You mentioned a lot of the reflation pressure now. Do you really get more and more reflation inquiries from your client recently?
I would say yes, we are, because of course in the last 2 to 3 weeks there has been a clear rise in long-term interest rates, especially in the US, and that can derail this equity rally if it gets, let's just say, out of hand.
For the most of the past decade, the world economy's problem, judged by central banks' target, has been too little inflation, not too much. So the easy conclusion, the accelerating of prices, is a good thing. So why the market still worrying about that so much?
And of course, if inflation shows its ugly face, there's a good face to inflation as well, and that is, inflation is a sign that the economy is recovering and that actually some prices may come under a bit of pressure, but that doesn't necessarily need to be a bad thing. It can actually also support profits. However, we can still see quite a long way or we may be a long way from what we consider problematic levels of interest rates.
This time, many people think that the price pressure will be more persuasive than usual. Larry Summers, the ex-Secretary of Treasury of the United States, warned that the additional spending of the government, $1.9 trillion, will lead to some inflation we haven't seen in generation.
Sure. And that is, you're spot on, that people are talking about this, and that, of course, ever since the financial crisis, we have really not seen inflation pressures come through, and that is for secular reasons, that the role of technology is really very strongly deflationary. Price transparency has become obvious because we're all going online and checking things. Large amounts of the things we consume have actually become cheaper over time. And secondly, in especially the Western world, is demographics. People are day by day becoming older, and when you become older, you tend to save more. And I think this environment has not gone away. Maybe even the pandemic has accelerated some of these trends.
瑞信进入中国市场已经超过60年。之前，他帮助众多的中国公司去海外上市，而被中国投资者所熟知。而在资管行业，2005年，他和中国工商银行合资成立的公银瑞信基金管理公司，已经成为了中国公募基金行业的头部机构之一。而伴随着中国金融市场的进一步的开放，瑞信在中国下一步的计划又是什么？我们的采访还在继续。The central banks now keep relatively calm despite what's happening in the bond market. What will be the triggers to change their mind?
Well, they will change their minds when they have achieved their main goal, and that is to get unemployment back to levels that for them is acceptable. So this is the key thing to watch, unemployment levels.
When will that happen?
I think we will see that. I'm just ballpark figure out 1.5 to 2 years. I mean, even Janet Yellen, the new Treasury Secretary of the US, has said that it will take about probably 2 years to repair all of this, and that's sort of what we need to keep as the central expectation from them.
We all remember that in the year 2013, Bernanke started tapering. We see the turmoil on the market. We call it taper tantrum. So can we say that in 2 years' time from now, we're going to the same taper tantrum?
I'm not convinced. Hopefully that won't happen again. Both markets and central banks have now experienced these asset purchasing programs and how to end them. We've seen sort of they tried to do it after the financial crisis. But this is not the financial crisis. We're in uncharted territory in monetary stimulus terms. At the time, they tried to save the financial system. They don't need to do this right here and right now, for sure. What they need to make sure is that they get unemployment levels down, while at the same time, as I said, long-term interest rates don't slip out of their hands.
Another hot topic about value investing or growth investing. Who will you bet, Elon Musk or Warren Buffett?
Both gentlemen are very honorable, either entrepreneurs and investors, and I would be hesitant to bet against any of them, to be honest. But in terms of value versus growth, I think what is happening now is the rotation towards growth. Whether this will really be enough to break the multi-year trend of outperformance of growth versus value is a very different question. They've outperformed for 13 years, and I would be extraordinarily hesitant to bet against big tech in general. However, in the environment that we're in now, I'd probably take more of a bet on Warren Buffett and value stocks here and now.
Let's talk something about China. The most recent news is China is considering open the capital account gradually this year. What does that mean to Credit Suisse?
Well, Credit Suisse has had a presence in China for many decades, and we welcome this opening up as a great opportunity for our clients and investors. As the Chief Investment Officer for Credit Suisse, I'm particularly excited to be able to access Chinese financial markets more easily. China has an immense role to play in investors' portfolios today and going forward.
From the investment perspective, what is your favorite picks in China?
On the one hand, we do like Chinese tech companies. I mean, the China growth story from here and forward will be much more focused on technology, artificial intelligence, robotics, if you will, even winning the race on tech, and that is something where they are showing immense progress, and we like Chinese tech a lot because of that. Secondly, it is clear that China is transitioning to a more sustainable economy overall, so sustainable energy sources will certainly be something that are very interesting to look at in China. And lastly, China is also a COVID recovery story. Tourism, hotels and so on from China look very promising, and therefore that sector is overall attractive. And then finally, connected to the whole China story, we also consider the RMB denominated credit as attractive. The interest rate levels in China are simply higher than we see it here in the Western world, and I think also as the opening of the China capital market will continue, you'll see very meaningful capital inflows into the credit and the bond areas in China.